There are days when the market just feels impossible. There's no clear direction, fake outs everywhere, messy price action, and honestly, most traders either lose money or they give up. But on those exact days, I waited for my setup. I nailed the move. Here's what happened. The market was chopping around, luring traders into both sides. Retail traders were convinced it was breaking down, but I stayed patient. Eventually, liquidity built up on the lows, price swept it, shifted structure, and I knew it was my setup in play. I entered with a tight stop loss, targeted above the imbalance, and the trade ran perfectly. That trade flipped what felt like an impossible day into one of my best weeks. This is why I stick to one system, because even when the markets look ugly, the same patterns repeat. And that's when you trust the process. You catch the move that most people miss. This setup is what keeps me profitable through the chaos, and it's the reason I no longer fear impossible market conditions. The strategy, super simple, and it is extremely profitable. And the best part about this is only one directional bias. So we only take this strategy when we're looking for sells. So once we're looking for sells, we're good to go and we're good to use this strategy. So very, very simple. If the market's doing whatever it wants to do before our trading time, we do not enter, we don't look for any trades until we actually come into that specific trading window. So most importantly, what we're going to do, we're going to look for a liquidity sweep. So in order to identify liquidity sweep, we need to see some sort of market structure shift first. So let's say we have this on the previous side of the market, correct? Let's say we grab the highlighter and let's say this stuff wasn't visible, okay? This would just be, this could be a break of structure or this could be a liquidity sweep. We wouldn't actually know until we see a market structure shift form on the other side of the market, which is in between our trading terms. So as you can see right here, that's a clear market structure shift. So with that information, what we're going to do now, we're going to look at the rejection of the high as well. As you can see, we weren't able to get back above this high. So this shows that, we have a strong holding point at these levels and the distribution rates are high. So anytime price comes back to these levels, we can expect it to just distribute towards the downside very nicely. So what we're going to do, we're going to grab the 62% of our Fibonacci and we're going to mark from high to low. And we're going to wait for the reversal of price into the 62% zone. So usually what could happen is that price will come into the 62% zone just like this. We're going to enter with a short position. Going to put our stop loss just above the high. Maybe even a 7 pip stop loss, completely fine. And what we're going to do, we're going to target a 1 to 2 risk to reward ratio, as you can see right there. We're going to consistently target a 1 to 2 R just like that. Boom, 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 boom. And as you can see, boom, we hit a 1 to 2 and that's about a 14 pip gain depending on the size of our stop loss. If it's a 10 pip stop loss, it can be much, much wider. But yeah, so if you guys want us to pass and manage your funding challenges and help you get a payout guarantee, click the first link in the description. We'll show you how we've helped many traders get their first payout without paying a single penny up front. And the best part is they keep 70% of the profits, which is you, and we take 30%. So you only pay once you do get that first payout. But let's get straight into this example. So it's really simple, and what we're going to do is we're going to just break this down for you guys. So boom, as you can see, we come to our trading time and we don't do absolutely anything. Now we're just going to monitor what price does do and how it does react. Boom. So as you can see, price is moving really nicely. And as you can see on the 5-minute time frame, if we look closely, we had a liquidity sweep right here, which is going to mark that out. And we also had a market structure shift just below here. So with that information now, what we're going to do, we're going to grab the Fibonacci and we're going to look to mark from high to low. So let's just wait for the next swing point to actually form. As you can see, that swing point has formed right here. And we could just get an entry just like that. And as you can see, it taps really nicely into that 62% zone we were actually looking for. So we're going to go short position. And we're going to put our stop loss just above the high at about 10 pips, and we're going to look to target a 1 to 2 risk to reward ratio. and that's about a 20 pip gain. So we can expect price to come lower to these levels, reason being because there's a liquidity point right here. Matter of fact, there's multiple liquidity points on this side of the market that we can actually have targeted. So once we let it do its thing, we're gonna see boom, boom, boom. As you can see, it does distribute towards the downside really nicely. It filled in that 62 to 78% range, which are usually ranges of high distribution. So if you guys do follow the strategy correctly, I can guarantee you can pass your first funded challenge. And if you want us to help you get your first payout, click the link in the description. Now remember, you don't pay a single penny until you do get a payout. The way it works, you get a challenge, we cover 20% of your costs, we manage the challenge for you, and we help you get your first payout. And only once you get that payout, you pay us 30% of your profit split. So that means it is a pay on results basis, and you don't have to invest any of your own money. I hope you guys did enjoy. Don't forget to like, comment, and subscribe, and I'll see you guys in the next one.